Hello everyone, welcome to Tesla Daily News. Today is June 6th, Saturday, and the following is the latest Tesla news. Let us begin with the stock market and how Tesla shares are performing. According to Finanzen.net, JPMorgan has sharply raised its price target for Tesla from $145 to $475 per share and upgraded the rating from underweight to neutral. The analyst Rajat Gupta highlights Tesla's uniquely deep vertical integration across both hardware and software, along with the speed and effectiveness of its technological development. He argues that these strengths are still somewhat underestimated by the market. However, he also cautions that heavy investment spending in the near term will weigh on profitability, and he does not expect earnings growth to really accelerate until around 2028. Using the most recent trading data, Tesla opened at $420.50, reached a high of about $424.68, a low of about $388.59, and closed at $391. The previous close was roughly $418.45, with trading volume of about 63 million shares. This means the stock pulled back around 6.5% from the prior close, after recently touching the mid-400s. A simple 10-word technical view: short-term pullback after breakout, support near 380, resistance 425. For investors, the key takeaway is that despite today's weakness, at the current $391 the stock still trades at a modest discount to JPMorgan's new $475 target, signaling that a major bear on Tesla has turned more constructive. Next, we turn to product and software developments that directly affect owners and long-term competitiveness. According to News.az, citing Teslarati, Tesla has rolled out a software update that makes supercharger stops far more visual and information-rich. This update builds on the Site Maps feature introduced in the 2025 holiday update. Previously, Site Maps provided a three-dimensional overview of selected supercharger locations, showing which stalls were available, occupied, or out of service in real time. The new update goes a step further by displaying detailed three-dimensional icons of specific Tesla models actually parked at each stall. On the car's navigation screen, drivers can now see recognizable renderings of Model 3, Model Y, Model S, Model X, and Cybertruck, rather than generic markers. Blue indicators highlight active charging sessions, and additional visual cues indicate open stalls or those under maintenance. This matters for several reasons. First, it enhances the charging experience on road trips by reducing uncertainty as drivers approach a site. Being able to see exactly how busy a particular supercharger is, and where different vehicle sizes are positioned, can help a driver quickly choose the most convenient stall. Second, it reflects Tesla's broader strategy of steadily improving its ecosystem by software, not just hardware, which strengthens brand stickiness and perceived value at virtually no marginal cost. Third, as more models and more non-Tesla vehicles use the network, sophisticated visualization may become increasingly important for traffic management and customer satisfaction. The enhanced maps retain existing functions such as integration with nearby amenities and predicted energy usage for a trip. Tesla is expanding Site Maps coverage across its global supercharger network, rolling the capability out to more locations over time. Investors should see this as another example of how Tesla uses its software advantage to deepen moat around its charging infrastructure, which is rapidly becoming a strategic asset, especially as other manufacturers adopt Tesla's charging standard. Now let us move to developments in Tesla's physical footprint and service network, which are crucial for future sales and ownership experience. According to the Bulgarian outlet Fakti, Tesla is actively hiring additional staff for its upcoming representation in Sofia, Bulgaria. Recently, the company posted several job openings, and now a new listing has appeared for a service manager position in the capital. The job description indicates responsibility for ensuring smooth operations of the service center and resolving issues that arise during vehicle delivery or in daily use. The presence of this service-oriented role strongly suggests that Tesla is not only planning a sales showroom in Sofia, but also a fully fledged service center. For existing and potential Tesla owners in Bulgaria, this is an important development, because up to now access to official service has been limited and often required cross-border trips. Local service capacity tends to remove a key barrier to adoption in new markets, particularly for buyers who are wary of long repair times or logistical complexity. While Tesla has not yet announced the exact opening date or location of its first Bulgarian site, Fakti reports that expectations point to sometime before the end of the current year. For investors and enthusiasts, this expansion into Sofia is another data point confirming Tesla's continued European growth, not only in major Western European markets but also in Central and Eastern Europe. As the service and delivery network densifies, it becomes easier for Tesla to convert interested consumers into actual buyers and to support them over the lifetime of the vehicle. Let us now look at autonomous driving and public perception in a key European market. According to the Swedish outlet Nerix Allehanda, Tesla plans to conduct test drives of self-driving cars in Askersund municipality in Sweden. These trials appear to be part of Tesla's broader push to develop and validate its autonomous driving systems in diverse real-world conditions. However, the tests are already drawing criticism from some local residents and commentators interviewed by the paper. One letter writer argues that Tesla does not behave responsibly in the labor market, implying concerns about the company's labor practices and perhaps its broader corporate conduct. While the article as summarized is brief, the core message is clear. There is a degree of skepticism and emotional resistance in the local community toward Tesla's autonomous vehicle testing. For investors, this highlights an important non-technical risk. Even if Tesla's self-driving technology performs well, community acceptance and regulatory goodwill are essential for large-scale deployment in Europe. Negative public sentiment can lead to political pressure, stricter local oversight, or even outright restrictions in certain regions. On the other hand, successfully completed tests that demonstrate safety and reliability could gradually shift perceptions in Tesla's favor. Enthusiasts should watch how Tesla communicates around these tests, and whether it can build trust with local stakeholders. Next, we turn to infrastructure and brand visibility in Switzerland, where a high-profile fan proposal has attracted global attention. According to the Swiss outlet Tages Anzeiger, Tesla fans have rallied around the idea of transforming an abandoned motorway rest stop on the A3 by Lake Walensee into a Tesla supercharger hub with a rooftop diner. The location, sometimes referred to as a ghost service area, has been in use for more than 2 decades and is described as decaying. Tesla has encouraged its community since 2022 to submit suggestions for new charging locations, and this particular spot has become extremely popular in the company's internal voting, ranking second worldwide, just behind a location in Bornova, Turkey. On social media, AI-generated visualizations show a redeveloped site with about a dozen charging stalls right off the motorway and a US-style Tesla diner on the rooftop, offering panoramic views over the lake and the Churfersen Mountains. However, Swiss reality poses significant obstacles. The Federal Roads Office, known as Astra, cut off direct vehicle access to the rest stop in 2017 due to safety reasons, specifically because the acceleration and deceleration lanes were considered too short. Astra has stated that there are major legal, traffic safety, and construction hurdles to any reopening, and that the current configuration does not meet the standards for a safe and compliant motorway access. The agency assesses any future commercial use as very challenging, and possibly not feasible at all. On top of that, there is an ongoing dispute between the property owner, Heinz-Peter Morsig, and the federal authorities. Morsig purchased the site in 2013 for about 800,000 Swiss francs, attempted to restart operations as a rest stop, and had a building application rejected in 2014. After the parking area was closed, he tried and failed to resell the property, and now insists that Astra should buy it back for around 1.3 million francs. The federal government, supported by federal councillor Albert Rosti, is only willing to pay the market value, which it estimates around the original 800,000. This standoff, combined with safety regulations, makes it unlikely that the fan dream of a Tesla-branded diner and flagship supercharger at Walensee will materialize in the near term. For enthusiasts, this story underscores the passion within Tesla's community and the potential brand power of destination-style charging hubs. For investors, it is a reminder that infrastructure expansion in heavily regulated markets like Switzerland must navigate complex legal, safety, and political landscapes. Even popular ideas may be blocked if they conflict with strict motorway standards. We now move to corporate leadership and wealth, which, while not directly changing Tesla's operations today, shape public perception of its CEO and, indirectly, sentiment around the stock. According to Focus Online in Germany, citing analysis from the Wall Street Journal and reporting from the Greek outlet in GR, Elon Musk is on track to become the world's first trillionaire. The report estimates his net worth at around $970 billion, growing at a notional rate of close to $1,000 per second when averaged over the past 3 decades of his entrepreneurial career. Spread out, that would amount to roughly $59,000 per minute, about $3.6 million per hour, and near $86 million per day. The bulk of this wealth is attributed to Musk's stake in SpaceX, valued at approximately $538 billion, followed by about $167 billion in Tesla shares and roughly $150 billion in stock options. Additional holdings include stakes in Neuralink, the Boring Company, real estate, aircraft, and other assets. The report emphasizes that most of this fortune exists on paper, tied to a liquid equity rather than cash. From a historical perspective, Musk's wealth is said to equal roughly 3% of U.S. gross domestic product, surpassing John D. Rockefeller's wealth at its peak, which represented about 1.5% of the U.S. economy. The analysis offers some vivid comparisons. With $970 billion, one could theoretically purchase about 2.4 million homes in the United States, acquire all 32 teams in the NFL plus all NBA franchises, and still have more than $500 billion left. Interestingly, Focus Online notes that despite these staggering figures, Musk does not live a stereotypical jet-set billionaire lifestyle. He is widely known as a workaholic who sometimes sleeps on factory floors, sofas, or even the ground during intense periods and takes relatively little vacation. For investors, this narrative reinforces the image of an extremely driven founder deeply involved in his company's operations, which many shareholders view as a key part of Tesla's long-term innovation engine. At the same time, the concentration of such an immense portion of his wealth in Tesla and SpaceX stock means that his personal financial fortunes are tightly bound to the performance of these companies. Finally, we touch briefly on safety and public incidents that, while localized, can impact perception of electric vehicles and Tesla in particular. According to the Manchester Evening News, and echoed by the Daily Star, a Tesla vehicle crashed into the front of a house on Bag Lane in Atherton, in the Wigan area of the United Kingdom, late at night shortly after 23:23. Emergency services, including Greater Manchester Police, 2 fire engines, a specialized rescue unit, and paramedics, responded to the scene. Images from the site show the front door of the house torn off, significant brickwork damage above the entrance, and debris scattered across the pavement. The front window was boarded up and the sidewalk cordoned off. Greater Manchester Fire and Rescue Service reports that 2 people received treatment at the scene from the ambulance service and were then taken to hospital, with injuries described by police as minor in the case of at least 1 woman. Fire crews used hose reels, covering jets, and battery-powered cutting equipment to mitigate any fire risk, especially given that the car was electric, and remained on site for about 2 hours. At this stage, there is no detailed public information about the cause of the crash, whether driver error, road conditions, or any potential technical factor. Nonetheless, such dramatic images can influence public perception and raise questions about safety, even if statistically they represent isolated events compared to the vast number of miles driven daily. For investors and enthusiasts, the key is to watch whether any pattern emerges from incident investigations and how Tesla and regulators respond when EVs are involved in high-profile accidents. That concludes today's episode of Tesla Daily News. Thank you for listening, and if you enjoyed this update, please subscribe and stay tuned for future episodes.